Bank's numbers coming our way. It's playing out at the bottom of your screen. Operating profit at 28,168 versus the 35,000 crore number same time last year. I'll just quickly take you through what the numbers look like. So you've seen a bit of a contraction on the operating profit, as I said. Provisioning coming absolutely in control at 3,060 crore versus the 2,610 crore number same time last quarter. Remember, the last year number may not be a comparable because of the one-off of the HDB Financial Services IPO, which happened last year. You've got 3,060 crore in a quarter where it's obviously a seasonally difficult quarter generally for HDFC, which is Q1. When you're looking at the PAT number, it's coming at 19,060 crore rupees with the ROA number coming in around the 1.94% mark, which is the quarterly average of around 0.46%. So 1.94% is the ROA. Again, the GNPAs and NNPAs are fully in control. I'll wait for the NII print. Essentially, that's going to determine where the margins go. And that's going to be the key factor for HDFC Bank. Also, ICICI's numbers will be coming on your screen in just a couple of minutes from now, is what I'm told. And we've got Aditya Shah on the phone. By the way, I want to quickly mark out the net interest income number for HDFC Bank. It's coming at 33,534 crore, which is up 1% QOQ. No real material impact, at least as of now, is basis the numbers. From what I see on the net interest margin number, if at all the margins may actually soften, is my first initial best case guess. But of course, we'll wait and watch as to how this plays out. Aditya, your first take on the numbers, HDFC?
Steady set of numbers. Loan growth and deposit growth were really known beforehand.
Yes.
So no surprises there. Credit cost has come at 0.4%. Marginally up 5 basis points from last quarter. A steady set of numbers there as well. The gross NPAs have come in at about 1.17% as compared to 1.15%. So steady set of numbers, waiting to see the NIM margin. If there is an improvement in the NIM, I don't think so. There has been some improvement. But overall, steady set of numbers, nothing exciting about the numbers as such.
Exciting. Gaurang, is that how you're reading into the numbers as well? Thanks for joining us again this afternoon. Good afternoon.
Thank you. Good afternoon, Harsh. And again, all disclosures as required by SEBI in place. Again, a disclosure, Harsh, we have a positive coverage on HDFC Bank. So I think slowly, steadily, we can expect improvement to come through. At least that is what I can understand with these numbers that are in front of us for the first quarter of this financial year. A little bit of more verbatim from the management in terms of some of the details in business. And one thing I would like to also understand with these banks that are reporting numbers, Harsh, is how they are, if they are, because I read a report some time back that the banks are now started to integrating AI on their platforms and all that. So how is that going to help and how is that going to improve? And of course, eventually, how is it going to have the positive impact on the wage cost or labor cost? But overall, steady set of numbers, no surprises, and no negatives, Harsh. That's a big positive as of now.
Absolutely. ICICI Bank's numbers also coming in just a minute on your screens. But while we are sticking to HDFC, Aditya, do you believe that we're firmly behind where the concerns with regard to management churn is concerned at HDFC?
Obviously. Before that, the NIM has come in about 3.32%, which is
correct.
As compared to 3.35%, so which is stable. No improvement seen there. So we need to understand from the management how are they trying to improve that over the period of next 2 to 4 quarters. That is one. Secondly, on the management, of course, the market will seek clarity on what is going to happen with Mr. Shashi's vision. He's up for the appointment in October. So the market will seek clarity if the regulator, if the bank will go back to the regulator and ask for his extension, or the market will look at somebody else. The base case being, the market will go back to the regulator and ask for an extension for Mr. Shashi's vision. So a lot of this noise needs to get curbed out, and the bank needs to get down to it.
Yeah, I mean that NIM softness visible 3.32 means that we've not been able to build on the margins, and the trend that we're seeing now from the Q1 numbers is that there is some softness in the NIM, Gaurang. ICICI's numbers flashing at the bottom of your screen, viewers. We'll quickly correct those numbers. That provision number seems incorrect on a QOQ basis. Let me quickly look at, Gaurang, how do you look at the margin number this time around? Because there clearly seems to be softness. Axis reported it, Kotak reported it as well. Now it's HDFC on a very low base. That softness coming through on the NIM. What's causing that?
So,
What's weighing down on the margins?
I could possibly, attribute that, Harsh, if I'm wrong. I hope I'm right on that. In terms of the credit cost and the credit demand, we are coming through a difficult quarter, given the fact that we had a lot of headwinds with respect to the geopolitical situation, of course, the constraints in terms of the impact of that on the various sectors, Harsh, whether it is related to demand for credit or whether it is related to, expansion or whether it is related to normal operations. And of course, then we had a little bit of setback in terms of a delayed monsoon. So like I said, for Axis Bank, Harsh, I would say I would take this quarter numbers for some of the banks and NBFCs as a little bit of negative, but I am assuming that this is going to be a one-off quarter. I am quite convinced, Harsh, with the kind of policies and with the kind of, aspirations that lie ahead of us, I'm sure the credit demand is going to go up. While we are talking about only credit demand, one thing good about India is, Harsh, that the interest rates have been kept steady. And we've not been hit negatively by a huge inflation number, time and again. Understanding that these things would possibly settle down in the next 1 or 2 quarters, and credit demand will help the margins to improve, Harsh. This is what my take is, and as I mentioned earlier also, one quarter should not be a basis of taking a long-term decision on these investments.
And you know what? There's yet another pat beat coming our way. It's ICICI Bank, and this one is like a machine. I mean, every time you try to raise the benchmark, and they come out with numbers which are far stronger than that benchmark. The NIM has come in at 4.36% versus the estimate of around 4.2%. The margin number last quarter was 4.32%. This is the only bank now among the top 4 which has actually had NIM improvement this quarter. Aditya, I'll come to ICICI in particular, but talk to us about the margins and what you're seeing as a trend this quarter. Is it deposit growth pressure which is weighing down on the margin numbers, at least for Kotak, Axis, as well as HDFC?
So if you look at the ICICI number, the devil is in the detail. If you look at the loan growth, that is about at 19%, the deposit growth is at about 14%, and the slippages there on ICICI Bank have not really increased. So for slippages, for ICICI Bank, the slippages are at about gross NPA. The gross NPA additions is at about 5,500 crores, which was a similar amount last quarter also. So from my perspective, what I can see is slippages is exerting pressures on the NIM for almost most of these banks where the slippages have been higher, and that is leading to an NIM pressure. Of course, the deposit and the loan growth will also be need to see as to where these banks are really growing. Mostly ICICI Bank has been growing their retail book, where they can see some higher NIMs as well. So from my perspective, I think ICICI Bank has reported a really very good set of numbers.
I mean, very strong numbers. 14,805 crore. That's a very strong beat on the 13,360 crore number, which the consensus was penciling in. It's a 10% beat. Gaurang, highest ever quarterly PAT for ICICI Bank. Impressive as always.
And in fact, I was going to say this in the morning conversation when we were discussing and dissecting the Axis Bank. So ICICI Bank, actually, if you go to see for the last couple of quarters, when you do comparison, okay, 3 comparisons, Axis Bank, ICICI Bank, and HDFC Bank. ICICI Bank has always stood out, and that's one of the reasons why it has performed quite better compared to the likes of HDFC and Axis Bank. So I think this is again hands down, no doubt. This is a great set of numbers, and this is the strong belief that I was talking about in terms of credit demand. So if ICICI Bank can do it, I think going into the future, you will possibly see the performance improve. I will not say the performance like ICICI Bank, but for Axis Bank and HDFC Bank, I'm quite convinced that the performance is going to improve.
5% growth sequential in Q1. I'm talking, I mean, maybe a decimal point here or there, but 5% growth sequential, Aditya Shah, on by ICICI Bank. Really a standout, right, for this quarter. It's the fastest clip of growth and at the highest ROA.
Bank has grown at about 19% loan growth yearly ever in the last 5 to 10 quarters. I don't think ICICI Bank has reported this strong loan growth. We need to understand from the management as to from where this loan growth is coming from, and are they balancing it, the unsecured side of the book with the secured side of it. To correct the slippages for ICICI Bank for 4,500 crores last quarter, and they are at 5,500 crores, which is fairly stable, nothing to complain about as such. So from my perspective, both banks have reported good set of numbers. Given ICICI Bank has grown more profitably than HDFC Bank, that is a trend that we have seen. HDFC Bank is unable to claw back the NIM margin, which is now really a reality. It's taking a really very long time for HDFC Bank to come back.
And Aditya, how do you look at Kotak's numbers? You seem, Aditya, this time, I mean, I have to compliment you. You've really come out all guns blazing. You've got your numbers absolutely on point. How's Kotak's numbers looking, Aditya?
They're fairly okay. So all these three banks reported. So one of the trends that is very clear in the result is that loan growth is good. Deposit growth is also fairly stable. 10 to 15% deposit growth, as I had expected. Most banks are reporting deposit growth there itself. A tad bit of increase in slippages, which is fairly okay given the huge size of books that these banks really run, which is fairly okay. ICICI Bank does not have a management problem or an NIM problem. So no bank-centric problems as such allows them to grow steadily and for the market to trust them and continue to drive the stock higher. HDFC Bank, their NIM problem and the leadership noise that has been there. Kotak Bank, again, the leadership succession, market will wait for the succession planning to come in and then see from there how the stock moves. So from my perspective, ICICI at the top, HDFC and Kotak will follow.
And Axis is the weakest. Gaurang, just coming to how you see valuations versus the kind of result delivery that's coming our way, right? And coming to the point as to how you see the stock reaction come Monday. You've got an ICICI Bank trading at around 2.5 times book. You've got HDFC trading at 2 times book with a 1.94% ROA. You've got a Kotak trading at a roughly sub 2 times book with a 2.1, 2.2% ROA. And then you've got Axis, 1.5 times book, 1.5% ROA. How should one, where is the risk reward the best at this point of time, according to you?
You're putting a gun on my temple, Harsh, and telling me to answer this question of yours. So let me say this, Harsh. Again, with all disclosure in place according to regulations, we have positive coverage on all four, ICICI Bank, HDFC Bank, Axis Bank, and Kotak Bank. I would be interesting to see on Yes Bank. I don't know, Yes Bank has not yet come out, but of course, this is not...
No, Yes Bank has.
Yes Bank, but
Gaurang, Yes Bank has. I'll come to those numbers in just a minute. Yeah.
Okay, great. So in terms of preference, to answer your question, now, short-term, very difficult call for a person like me to take, Harsh. But yeah, ICICI Bank, followed by Axis Bank, then HDFC Bank, and then Kotak Bank. HDFC Bank has gone a lot of negative news flows, and in terms of valuation, it is one of the cheapest, if I'm not mistaken. But if I have to pick one, given the Q1 numbers and the future outlook on earnings, I would definitely pick, if I have to pick only one, then ICICI Bank would be the one.
Okay, ICICI Bank would be the one. Aditya, in terms of your pecking order, before I come to PNB and Yes Bank, both of those numbers also, just kind of quickly we'll discuss those. But in terms of the top 4 private sector banks, what's the pecking order there? I remember, I believe we spoke on Friday and your pecking order was ICICI up top.
Absolutely. So there are two or three things happening here. From a growth perspective, ICICI Bank, no problem, no management issues, no nothing, no nonsense kind of a bank. Just go out there, grow, keep the asset quality in control, and that's how it is. So from my perspective, that is how they will do. I think it's been long proven that ICICI Bank is a new market leader as HDFC Bank continues to keep struggling. So that is one. From a value perspective, I still think HDFC Bank presents a lot of value. But the problem is that they are not getting their act together. Some news flow or the other continues to disturb the bank. So as I said, the bank must introspect, go out of the limelight, and try to do business as they used to do with Aditya Puri. That's how it is going to be. So my pecking order will remain ICICI Bank, then HDFC Bank, and then Kotak and Axis on the same wicket, and management on all three. HDFC, Kotak, and Axis is something of concern and needs to be continuously monitored.
This single digit, I just want to try and extend that, what you just said, Aditya, this single digit YOY EPS growth. I mean, from a top private sector bank in India, which used to garner a valuation of around 4 times book, be like a 20% bank, where you would see advances grow at 20%, EPS grow at 25%. All of that has unwound fairly quickly. So the trigger could be EPS, but at what point do you think EPS can come back to double digit at least?
So there was a last point in time when everybody said that ICICI Bank needs to learn from HDFC Bank. It is absolutely the reverse now. HDFC Bank needs to take a feather out of ICICI Bank's book and go aggressive on the retail side of the book, where aggressive margins can be taken. And at the same time, deposit is not a problem for HDFC Bank. Deposit garnering has been pretty strong. So from my perspective, the merger gyrations as they were analyzed are taking much longer to stabilize for HDFC Bank. On top of the management problems that are there, they are not letting the bank settle down. I had expected the NIMs to show steady improvement over the last 1 or 2 years, where from 3.3 they should have moved to 3.5 and slowly and steadily upwards from there. But that is not really happening. And of course, the secured book on the housing side of it is also something that is there. So from my perspective, until the NIMs don't improve, I don't think the EPS is going to improve anyhow. Profitability, NIM is equal to the profitability of the bank. If that doesn't improve, the EPS growth will remain in single digit.
By the way, Aditya, I'm told that HDFC Bank's net interest margin is not 3.32, it's 3.26 versus 3.35 last quarter. There's a 9 basis point decline. This is a record low margin number clocked by HDFC Bank. That's what's really weighing down on the numbers. But enough said on the top 4. There is definite alpha available in some of the other ones. And Yes Bank is one of them. Gaurang, the expectation was around 980 crore of profit. They've done 1,050 crore plus in terms of profit, Yes Bank. Margins are steady, delivery is good, OPEX efficiency is playing out on the numbers, and that's visible, especially in the operating profit jump that we've seen from a Yes Bank. The only possible worry is the higher credit cost. Credit cost has come at 395 crore versus the 280 crore number which was expected, 290 crore maybe expected, and versus the 280 crore same time last year. I'm removing seasonality from here. 190 crore was the credit cost number last quarter, give or take single digit crore numbers. I'm just ballpark giving you the numbers. How should one therefore look at Yes Bank, Gaurang?
So I think, first of all, yes, this is not a recommendation because we don't cover Yes Bank, but over the last 2 quarters, there has been a sizable amount of improvement in reported numbers by Yes Bank. Point number 1. Point number 2, when you are coming out of a long drawn period of difficult time, you need to possibly take a hit on the credit cost and possibly offer a little bit more to attract those deposits to come into you and stay with you for a longer period of time. Because otherwise, your loan book will go out of a window if you don't have the kind of funds to service that kind of credit demand that is coming into you. So I would possibly understand that this will settle down over the next 2 or 3 quarters once. And one thing good is now that stability is coming in, Harsh. For Yes Bank, it was, 1 or 2 quarters of recovery and then 1 or 2 quarters of those recoveries again going bad. So that has now gone into the rearview mirror, according to me. And I hope that Yes Bank does. They have got their act together, which is definitely reflecting in the numbers that they are showing. And I hope they will put a little bit of more effort to possibly, streamline and strengthen the kind of reported numbers they have given. I hope, again, I understand there is no one-off item that in the numbers that were reported.
I know you can't give us a view, Gaurang, but Aditya can. Aditya, would you consider Yes Bank at this juncture?
So Yes Bank is in the middle of the biggest overhaul that we have seen. New investors are coming in. The results, they are fairly okay, nothing to complain about as such. In fact, they reported a lower slippage and a better asset quality. But my eye would be on the new management, on the new investors, how they turn around the bank, install a new management. If they do, from there on, Yes Bank will move on. So right now, I am just watching Yes Bank as to how the developments happen in Yes Bank and how the new investors come in and overhaul the bank completely.
Okay. What about PNB and some of the PSU banks? Aditya, you've been long-standing in your argument that private sector banks is the way to go. But I must say PNB's numbers are looking solid at the outset. What's the view there?
So from my perspective, the last 5 years belong to the PNC bank. They will continue to do well over the period of next 2 to 4 quarters as well, as they have cleaned up their loan book. And now secular loan growth and deposit growth is really happening. But at a point, we will reach peak ROA and ROE for all of these banks. And at that point in time, that's the time to get yourself into private sector banks. Many private sector banks are now trading at record low valuations. So from my perspective, PSU banks will continue to do well, but purely from a valuation perspective, some of the private sector banks look better too.
Okay, Gaurang, how's the tilt looking for you, private versus PSU, and the kind of numbers that PSUs continue to deliver?
So honestly, I wouldn't be biased towards one, Harsh, because we have coverage on both sides, including the third angle, that is NBFCs. So we fundamental coverage on, as I mentioned, HDFC, Axis, ICICI, Kotak, IndusInd Bank, Federal Bank, City Union Bank. On the public sector bank side, I would definitely like to mention that amongst, there is something called notorious or a naughty boy in the pack, and that was PNB. And that was one of the reasons, Harsh, that was because PNB had the loan book exposure to a lot of vulnerable sectors. And that was the primary reason why we had seen elevated level of gross and net NPA, which of course the bank's management got their act together, and then now the steadiness and strength is coming back to the balance sheet. As a disclosure, PNB happens to be under our coverage, and my sense is that the underperformance that we've been witnessing in 2 public sector banks, specifically Canara Bank and PNB, looking at the numbers, PNB should possibly start to do better going forward from it. And I expect the run rate of these kind of numbers to be delivered in the quarters to come by. Other than this, State Bank of India, Indian Bank, Bank of Baroda, Bank of India, and like I mentioned, Canara Bank and PNB features in our fundamental coverage from a long-term point of view.
Okay, all right. I know Aditya kind of mentioned how he expects stock reactions to play out Monday. Gaurang, your view, and again, this is not, markets are closed today. There's no way someone can play a trade. But give us your sense. How would you expect the reaction to be like on Monday on some of these counters? Of course, we're not factoring in commentary, but just your take.
So first of all, thank God markets are not open on Saturday and Sunday. Otherwise, you would possibly be having a shorter life, along with Aditya, of course, my good friend. So on the reaction on Monday, Harsh, I think ICICI Bank will be positive. A little bit of pressure on could be witnessed on Axis, Kotak, and HDFC Bank. I think PNB should do better. And Yes Bank, of course, not in coverage, but a positive reaction is expected.
Okay. Aditya, any additions to that?
No, I agree. ICICI Bank will continue to do really well. HDFC Bank and HDFC Bank, Kotak Bank will continue to struggle.
All right, gentlemen, this has been a long conversation and you've very patiently gone through all of the numbers, given us your views and given viewers a great perspective, right? A great setup for Monday. Thank you so much. Really appreciate both of you coming in and giving us this.